Hi everyone, this is Dan and the Future Holds Crypto. So first of all, probably you noticed that I haven't released any new videos lately, and mostly because I think that a lot of the things that I've already mentioned haven't changed, and I don't like to. I mean, this is not something that I make money of from the YouTube videos. In any case, even if so, I appreciate everybody that does that, and I'm watching a lot of channel in this regard, but. I think that I said a lot of the things that are part of the strategy. Nothing has changed so far to the things that I mentioned in the previous videos in terms of the cycle that we are in today. So I didn't feel the need to say anything else. And of course, if you're there are some other developments specific to some areas like Cardano or XRP with the lawsuit, and we have a lot of really good materials on the internet, and they can cover it much better than me. But in any case, I wanted to make I will try to make a short video because I've received a lot of requests, not questions actually, from my friends and actually my family asking me, is this a good time to buy, what should I buy, and stuff like that. And I'm trying. I will try to cover a part of that, because I feel that if you are getting into this market, you at least have to take a few items into consideration. And I've noticed a lot of mistakes that people are doing when they are getting into this market. So I'm gonna try to go a little bit through them. So first of all, I feel that a lot of this, I'm not sure exactly how much in percentage wise, but this is not the beginning of the cycle, right? The beginning of the cycle started, I believe, well, there are a lot of theories here, but probably some would say that since the halving or March last year, and that definitely would have been a great time to get into this market, right? If they're asking me now if this is a good time, well, the best time would have been last year when I told them. But yeah, that's I understand how people usually work in terms of psychology, because even for myself, when I bought it, it was really hard for me to do it because it went against my basic instincts, the danger fly, right? The reptilian brain. When you see something bad happening, you tend to fight or fly. So in that case, you have to do basically the opposite. It was not a natural process for myself either, and you basically learn with it. And so a lot of people ask me, is it a good time to buy? What should I buy? And first of all, the best time would have been last year. However, there is no not going in today is not necessarily a bad thing, but if you want to go in right now, you have to take into consideration that the risk is a little bit bigger than it was 1 year ago. Some cryptocurrencies did already a 20x, 30x, 40x, some even more. Take Cardano. Last year, approximately this close to March, it was 0.02. Now it's 1.2. Let's imagine that, right? So while I do think the market still has upward potential, and I still believe we are in an increasing trend, the trend is your friend, the risks are a little bit bigger right now. And also, while you will hear a lot of people saying that they can predict prices or when it can happen, well, nobody knows for sure. And if they say otherwise, you should take it with a grain of salt, because what you can do is try to forecast some possibilities on what could happen, but nobody knows for sure. So if you want to get into this market right now, there are a few things. One, first of all, you need to accept the fact that you might not be on top of this cycle. There might not be a lot of potential upwards compared to last year. I mean, compared to stock market, I still think it's a lot of upward potential still. But people, when they get in here, they already see the 40x stories, the $1,000 made into 50,000 or 100 or something like that, or even more, and they have already the feeling of they have missed out. And the feeling is that they want to get in to get rich quick, right? Well, I still believe that we are early with cryptocurrency. We are at the brink of mass adoption, at least my perspective, and I had videos about this last year. But I still think we have a long way to go. So even, for example, if you miss this cycle and you have your portfolio goes down, you have to assume that this is a long-term investment. This is not necessarily a get-rich overnight scheme, and you have to work for it, right? You have to study, you have to work for it, and do it little by little. People have the tendency to believe that they have to go all in because they feel that they already missed out a lot of the potential, and that's why they think, if I go now, I have to put everything in. Well, that's the first thing that you need to avoid, because first of all, the risk is a little bit bigger right now because the market is already up a lot since last year. Second, this is a false premise, and I'm going to tell you something, a very interesting calculation actually done by eToro. If you have invested $2 per day in the last 6 years, each and every day, $2 per day, that's for some people that's nothing. I mean, just a coffee or something like that. Today it would have been worth $250,000 in Bitcoin. So this should give you a better perspective. You don't have to go all in. You just have to recognize the potential of this market, recognize the timing, and then try to figure out a long-term plan. If you want more risk, of course, you can do it. You can go more with more in. But in the meanwhile, if you don't have a lot of knowledge into this and you don't have time, this is the easiest and the safest way to get into this market. And there are a lot of platforms that offer this feature. Revolut has one. You can go in Revolut and do a recurrent buy per day, per week, per month. You can buy some crypto that are on Revolut. Also, Coinbase has this feature, and actually myself, besides my portfolio that I invested from last year, I also have a longer-term plan. This is basically, so I'm thinking basically retirement, tens of years. I have a recurrent buy set on each Monday. For 30 euros, I'm going to buy Bitcoin because I believe that Bitcoin, at least on the long term, would be the safest. Of course, you can do it with others as well. I also believe Cardano, for example, is something that will grow a lot in the next years. But it has already grown, but it has a lot of upward potential. However, I'm doing it with Bitcoin for a moment. I probably will go with others. But this is what I'm doing, and this is something that you can do very easily. So if you want to go in, don't go in with all of your money. Also factor in the possibility of you missing the top of this cycle, and think on the longer term. Think at least a few years, and I believe the next cycle will start with 2024. It will be the top in 2025 or 2026, whatever. I'm gonna go into that later, but this is the first thing that you need to understand. And don't have this mentality of going all in, even if you do, not go all in, but if you go with more money, since in one shot, at least accept the fact that you will have a potential of minus 30, minus 40 overnight percent. I'm talking in percentage, minus 40% overnight. If you have the tendency to panic and sell, you're gonna get mad on this entire new sector and you're gonna get out. And I strongly advise, if you have this feeling, of at least to acknowledge that it might happen and act accordingly, right? So that's a part of the equation. Second, it's how you choose the assets. Don't go and choose random assets or based on the name or on the price. I've seen a lot of friends that look at the price. For example, they consider Bitcoin very expensive, and then they see something like, let's take XRP. XRP is 0.56, and they believe it's cheap. While I do believe XRP is cheap because it's being suppressed by the lawsuit, they still miss a very important part of the factor here. Cheap compared to what? They don't understand the market, market cap, the relationship between the market cap, number of coins in circulation, and the price. This is very important for you to understand. It doesn't matter what the price is. It matters only the percentages if the price gains. So if you have 300%, even if it's a big price, you'll get a 300% increase on what you invested there, right? So it's not about the price. And also, if you see, for example, here, Bitcoin is almost $58,000. There are only about 18.6 million of Bitcoin out there. There will ever be more 21 million. Some of them are already lost, and the market cap is more than $1 trillion, right? And if you look at XRP, the price is 0.56, but the circulating supply is 45 billion XRP, with a total possible supply of 100 billion. So you cannot think that XRP will reach $58,000. If it did, it would be something, I don't know. I'm not saying it's not necessarily possible. Everything is possible, but really, really improbable. Really, really improbable. It will have to, maybe the dollar will collapse. Maybe Bitcoin at that point would be trillions. I don't know. You need to understand this ratio between price, circulating supply, and market cap of that coin. Also, I've seen a lot of people that go on the coin market cap and go below in a more than 500 range, and look at some random graphs here, or see somewhere in the internet a graph of a random coin that shot up overnight a lot, and then they try to FOMO into that, but they don't understand what that coin does, what is the thing that the project wants to solve, who is the founder of that, what's the social network of this, and they basically don't know anything about the coin, but they invest in it. Well, now in the bull market, it's easy to think that you're smart, because in a bull market, when the trend is up, a lot of money is circulating from one coin to the other, because people are speculating with this. They get money from increased Bitcoin, for example. They sell some Bitcoin or whatever other coin in top 10, and then they go with a bigger risk and they move it in a random coin like this. Some are good projects, but you need to understand what they do. But a lot of them will fluctuate. A lot of them will catch wind and from the entire market and go up. Try to understand, do some research before you invest money in the random coin, because if it's a very new project, you need to understand at least who's the founder, what they have to offer, maybe look at the code base if they are public on Git or something like that. See what's the actual activity going on there. If there's nobody that has written anything on the code base since 2 months ago, it's weird, right? Also, the founder is known for something else, or the team. What is the social impact of that? I mean, the people that are. Is there an active community? Is it something that it creates a lot of excitement around it? Try to do some research before you invest randomly in a coin like that, right? If you're at the beginning, I would actually suggest, if you do something like this and you want to take a gamble, let's say, don't do it with a lot of money. I would suggest that if you are a beginner, try to go with the dollar cost averaging, with what I said, by recurrent buys with one of the top coins at least. And if you want the next step to invest more in, at least go into a top 10 or something, to a top 20 at least, And then if you want to gamble with less money, but also try to do some research on that project. Don't go in blindly. Another thing that you need to understand before you go inside here, inside investing in crypto, is to understand the cycles. You need to understand that Bitcoin is, for the moment, the crypto that is generating the market cycles for the entire crypto asset class, because it's the biggest. You have noticed that the Bitcoin is already has a market cap of over $1 trillion. That's huge, and it probably will go more than this in the future. But what generates this? This basically, Bitcoin has halving events each 4 years. That means that the algorithm, the network adapts, and the complexity for mining increases. So with the same mining gear, you will be, after the halving event, you will be mining with the same gear in the same time, 2 times less Bitcoin that you did before the halving. So it basically, this adjusts the market offering and demand, right? And that's why after 4 years, usually the price will adjust. And there are the miners that are mining Bitcoin each and every day, and a lot of them are not accumulating. They are selling periodically because they have this is already a business, and they have to sustain the costs. They have the business and adjust for the costs. So Bitcoin is produced every day and basically sold every day from the mining. So this selling creates a pressure on the market, right? After the halving events, this pressure is reducing by half. I mean, not by half. It's reducing. It's cut in half. The selling is cut in half. It doesn't occur exactly after the halving, because a lot of the miners have a stock there, and it will take a while until they sell everything, and then they'll only rely on what they produce on a daily basis. That's why it takes a couple of months until after the halving event to actually be priced in. But this is a very interesting the stock to flow ratio. This is from Glassnode, but you can find it in other free places as well, like this one. But this is the stock to flow ratio. The stock to flow ratio is a popular model that assumes scarcity drives value. Stock to flow is defined as the ratio of the current stock of a commodity, example circulating Bitcoin supply, and the flow of the newly mined Bitcoins. Bitcoin price has historically followed the stock to flow, and therefore is a model that can be used to predict future valuations. Well, to be fair, if you look at it, it followed this model very well. I mean, it's above or a little bit below, but if you look at it, it followed it quite well. At the beginning here, it's all mostly above, because it was the price was much easier to speculate and drive a higher value. But this model also takes into account the production and the production of Bitcoin and the demand from the market to some degree. So if you look here, this is the halving events in 2013, in 2016, and then 2020. The next one will be 2024. The next one will be 2028. I'm not saying that we'll be following this exactly, but it tends to follow these lines. So this is practically what generates the entire cycles of the crypto market, because the other cryptocurrencies that exist out there haven't yet gained, they haven't proved their utility in widely spread use cases, and some of them might be on the brink. This might change in the future when another crypto will demonstrate utility and worldwide use case. It will decouple from this cycle that Bitcoin is generating from the entire market. But we're not there yet. Of course, you will have small caps that explode independently, let's say, or not necessarily independently, but much more than Bitcoin. But that's a small cap with high risk. But in general, this is what happens. So you need to understand this. You need to plan. For example, when after the the halving event, for example, we had it here. 2016, we had the top was in December 2020, right? So after that, we had a bear market of a few years, and only in May 2020, we were, depending on how you look at it, you can say it started here or here. It started to recover in price. So if you're missing this cycle, don't panic. At least if you are a beginner and you're missing this cycle, don't panic and start to accumulate in the bear market for the next one. That's all. But you need to understand the cycles. Don't go in blindly with in this. And a lot of people have no idea about these cycles, and it's not something that it's not very hard to to understand if you put some time in it, right? And as you can see, the stock to flow price prediction from June is around $100,000 for Bitcoin, and in 2025 in May, well, it's around 1.3 million. Let's see what happens until then. But don't think that you have missed everything and you need to go all in. As I said before, there's still upward potential and you still have time, but don't go all in. So you can if you go all in, you'll make drastic decisions based on your emotions, because you went all in. You'll see fluctuations like you've never seen before. You'll see your portfolio go up in tens of percentage overnight, maybe thousands of dollars or hundreds, or then at one point you'll see fluctuations of tens of thousands of dollars and stuff like that. But you need to understand, you need to create a strategy, and the safest one is to think on the long term and couple with one of these cycles. This is my strategy. I'm not a trader. I'm trying to accumulate as much as possible. Now I'm not accumulating anymore because I don't think, I accumulated here when it was the market was much lower than this, so I don't feel the need to accumulate any longer. I'm going to try to couple with this cycle and another thing that I'm watching, because this is on-chain matrix. Being a blockchain, you have a lot of data that you can extract from it compared to, I don't know, stocks, and compared to usual technical analysis on stocks. Yeah, you can do technical analysis on crypto as well, but compared to stocks, for example, you have these powerful tools. It's on-chain analysis, and combined together, I believe that they have a stronger potential to understand what's going to happen. Give me a second. So let's take into consideration an indicator, Nupol. This is the net unrealized profit loss in the difference between relative unrealized profit and relative unrealized loss. You can learn about it more by searching on this what this indicator shows. But if you see here, historically speaking, this is the graph here, and this is the areas: capitulation, hope, optimism, anxiety, belief, denial, euphoria. And this is very important to understand in which state of the market you are. Because if you see here, historically speaking, when Bitcoin went into the euphoria grid, it has a 100% accuracy in terms of a big correction, or actually is the start of the bear market. The only time it had a correction, actually big one, but that did not start a bear market, was in 2013, April, when it was the first peak. Then it went in a big correction for a couple of months until September, and then it had another rally until November, December. And then you can see here it went again in the grid area, and then the bear market started. In 2011, it went here in euphoria, and it started the bear market. In 2017 again, euphoria, bear market. So what I'm looking for is to see when this indicator goes into blue, because after that it has a very strong probability that in a few, maybe less than 14 days, the correction might start for Bitcoin. And it's very interesting to see what's going to happen now, because it might follow something like 2013, where with two peaks. We might have one in April. We might have another one by the end of the year. Or we also might have only one. And if you, it might be, I don't know, in the summer of in this summer, or end of summer or beginning of autumn. In any case, after Bitcoin starts to correct, if you are, for example, in altcoins, it's possible that after Bitcoin corrects, the altcoins might have a final upward rally, spectacular one, and then a big correction will happen, or actually the bear market for a couple of years will happen. So I'm going to try to study this and couple with this. This is my strategy. But this is from because I already accumulated. In any case, you can build your own strategy and try not to change your strategy based on the emotion. You see something there with me minus 40% overnight, you're getting anxious and you're selling. No, you don't base it on emotion. Stick to your strategy. Of course, if something specific to your asset happens, and it's only your asset under attack, like a hack or something like that, you might need to change your strategy based on that asset alone. But I'm going to talk about the relationship between markets or crypto in general. But another thing that I'm watching here is thermocap. And you can see here that when indicator goes into this red zone, it's similar to the other one, but it started the correction. So the only one, basically when it goes in red, it's start of the bear market, and it has a 100% accuracy, even with 2013. And this is how you can couple it, because, for example, this indicator in April, when there's only a big correction but not the end of the bull market, if you look at the Nupol chart, you can see if we have something like this here, we might have a chance for another. If it goes only like this and it starts a correction only to this part, and as you see here, we're not very far off, because when it starts, it moves like crazy fast. We can be like within a few weeks here, or even 1 week, bam. So if it goes like this and it starts the correction from this point, we might see a big correction and another one, another peak by the end of the year or beginning of next one. But in any case, this is another thing that helps us to get a better perspective combined with the other one. Sorry. Now, another thing to look at exchange deposits. So if you see a big massive move of people depositing their crypto within an exchange, it's very probable that you will see a sell-off, because this is how you sell your crypto. You have to deposit your crypto on an exchange and then sell. So for the moment it looks great, right? But when it moves, it will move fast. So it's something that is also interesting to look at on a daily basis if you think the top is near. But whenever people are moving in mass the crypto to exchanges, it's very probable they're starting to plan the sell-off. And now there are a few other indicators that you can watch here. You can see that whenever they go in red, it started a big correction or a bear market. The Nupol multiple as well. This one as well. So we have a lot of indicators that are really important to look at. And now going back a little bit to your strategy. It's very important for you to have a strategy and stick to it. And don't let your emotions influence your strategy. Also, I've seen a lot of times when someone asks about a specific coin or crypto, it went down with 30% overnight, let's say, and someone asks, what happened to that? What happens? Why did that coin go down 30%? Well, look on the entire market. It's very important to understand the context of the entire market. Is the entire crypto market experiencing a correction? Look at the other assets, because if the entire crypto market is experiencing a correction, that might be just the markets doing what the markets do, right? It's not something spectacular. If it's the market, entire market is doing something, it's you don't have to worry. It's just the markets go up and down. It's a young one, so you'll have more volatility than the others. So stop asking why one specific one, crypto, has gone down if the entire market did that, right? So another thing that you have to look at is there are a lot of correlations out there with going outside of the crypto market. So let's look at the DXY, US dollar currency index. This is basically a graph that shows the buying potential of the dollar, and it's important to look at because most of the time, actually, when crypto had a bull market, the dollar index lost in value. So we had a bull market in 2017, for example, and the DXY was in a bear market. Even now, since March last year, we had a lot of gains in crypto, and what happened? We had the US dollar index went in a bear trend, a downward trend. And even here, 2013, when was the 2017, 2013 basically. But in 2013, if you look, this is kind of the trend for the DXY. So it went down when the crypto went up. So it's an important indicator that you can look at and correlate the prices. And also look at the S&P 500. Sometimes they are correlated. And for example, there's a big drop with the S&P 500. It's very possible for the entire crypto market to drop. So there are a lot of correlations that you can look at, and you can learn this in time. But you can, if you're new to it, you can stick with a very simple dollar cost averaging, like I said in the beginning, strategy, and think on a long term. Stop thinking on getting rich overnight. Put your money where your mouth is. Start working on it. Stop thinking that it's too late, because imagine Bitcoin. Now it's 58,000. In December it was less than 20, or very close to 20, and people were like, "Oh, we missed it again." Now it's almost 60. Imagine when Bitcoin was 10,000 and it went up from 1,000. People were still thinking, we missed it. And so if you go back to 1,000, it was a few months back. It was only tens of dollars or hundreds of dollars, and even less. And people were like, "Oh, we missed it." But imagine if you bought one in each and every point in time. That's why if you have a plan to keep buying it for a long period of time, in a long term, you might be very pleased with yourself, and at least you won't be thinking about that you missed it. You know that you did something about it, and even if, for example, in absurd it went to zero, it's whatever, $2 per day or $30 per week. You don't care. You didn't lose a lot to begin with. And Another thing that I wanted to show you related to the potential, because a lot of people, if you understand the market caps, then you'll be thinking about yeah, but it's already too big, and because people have the tendency of thinking in billions are too big. Imagine that if you look at the money supply of the entire world, it increased by 40% in less than 1 year or something like that. 40% of the entire market money supply from the dollar, from the beginning of the existence of the dollar, had been created since 1 year ago. So in the crisis from 2008, it was they needed to print $700 billion to save the entire world economy. Right now, they already printed more than 6 trillion, and it's not enough. Imagine imagine that. Also think about the inflation. You understand the inflation. I'm gonna tell you one thing about the inflation. $100 from today is worth has the same value as $65 in 2000, 45 in 85, and 5 in 35. So take that into consideration. And now going back to the fact that billions sound a lot for normal people like you and me, I want to give you a perspective here. So this is this point here represents more than one. Each squared like this is worth 100 billion. And silver 40. Okay, so cryptocurrency, this is old, but that point is was only 244 billion, but now it's more than 1.6 trillion or something like that. But in any case, this is the cryptocurrency money in the cryptocurrency. Now you have the military spending. 3 point US budget deficit. That's now it's bigger than that. 3.8 trillion. The coins and banknotes 6.6 trillions. Fed balance sheet 7 trillion. And now it's bigger. Billionaires 8 trillion. Gold 10.9 trillion. Fortune 500. It's I believe it's 89.5 trillion, the stock markets. So the money supply 95.7 trillion, global debt 253 trillion, global real estate 280 trillion, global wealth 360 trillion. This you can visualize this here, right? To understand where we are with the cryptocurrency in terms of relationship with the other markets. Derivatives, notional value 1 quadrillion, whatever. This is it's already sounding like science fiction. But in any terms, you need to understand that we have a lot to go, right? We have a lot to go. I'm not saying that it will eat these entire markets. I'm just showing you that there's a lot of potential here in terms of price action. I still believe that this will be a very important part of the economical or the future, actually, and technological revolution of how the society works. So I hope that I gave you an intro here. It's a lot to take in. But if you want to invest money, you need to spend a little time to invest in your knowledge first. Don't go in blindly. Have a strategy. Understand some factors in the market and go in, right? You won't be sorry. Thank you. Have a great day. See you in the next one.